Hey everyone, it's Evan here from the Trade Risk on Tuesday, January 30th, here with a midweek market recap video. We're going to cover all of the major markets and the current market environment. We keep things a little bit lighter in the midweek video. We skip the sector analysis and really focus on just the major markets and environment. Today's an exciting day because finally we have the market doing something a little bit different. This video analysis will finally come with some different updates. We've kind of been in that same kind of song and dance of grinding higher, trend continues, momentum builds, and now given today's action, we finally have the market selling off. It's something we haven't seen in quite a while. Minor still, but there are some interesting stats I want to go through today. There's a lot of sort of observations I have and some scenarios I want to walk through today. So let's jump into it here with the S&P 500, the SPY ETF. You can see we finished down 1.07% on the day. It's been the first time in many months, I believe, since we've had a 1% or greater pullback. I don't know quite how long, but I know it's probably in record territory, and that's good for 3 SPY points to the downside. So before we look at this daily chart, let's first just look at this weekly chart. We always like to get context here to start off our videos with the bigger time frames. So we're going to look here at the weekly chart. You can see we're down 5 SPY points. That's 1.73% on the week. And notice we have an inside week developing. Now, it's only Tuesday. There's plenty of time left in this week. But as it stands right now, we had a small gap lower to start the week off yesterday, which kept us below the highs of last week. And currently we've sold off still above the lows of last week. So it's an inside week. As it stands, we've retraced most of last week's progress to the upside, but notice when we look at this overall trend and structure here, there is absolutely zero technical damage. It is a blip on the radar for the actual pullback or the the actual movement over the past 2 days. It is still well above the rising 8 and 20 period moving average here on the weekly chart. And again, no damage to speak of at all. Now, on the daily chart, that changes a little bit. We do have some short-term technical damage to take note of. The first is, and we'll just go right back down to an intraday chart here. I'll throw up the 4-hour chart. We've talked about this trend in the past several videos that we released, and the trend that roughly starts from the start of this year of 2018 all the way to the highs of just a couple of days ago. You can see it has been pretty much trading entirely within this rising channel here, and you can refine the trend lines to as tight or as loose as you want, but this generally speaking encompasses all of the trading from this year. And you can see, given today's gap down on Tuesday, we broke below that. We've moved below that channel, and we are now trading below the slope at which we were previously accelerating higher in. Now, another note or level to pay attention to was this 282.50 area. We spent about 2 or 3 days chopping around. Go back to the daily chart. We spent 2 or 3 days. Let's see if we can drop that note. There we go. 2 or 3 days in here, kind of chopping around this 282.50 level. That's where we were finding support. We were kind of finding buyers stepping in right around that level. And you can see as it stands right now on Tuesday, we're closing below that point. So we're actually breaking the slope of this prior trend, and we're also closing below this sort of horizontal support, which was indicated there by this chop over the 23rd, 24th, and 25th of January. So if it stands where tomorrow we do see sellers kind of make some more progress, the next level that I'd be paying attention to would be right around this 280 to 279. This is where we spent again some time kind of carving out some support, kind of digesting, moving sideways here over the course of the 17th, 18th, and 19th of January, right in here, right around this 279 to 280 level. If we get follow through tomorrow, that's the next sort of area of interest that I would be paying attention to. Now, if we go back to the daily chart, you can see we finally are breaking and closing below the 8-period EMA. That's the first time we've seen that all year. We saw the VIX spike to five-month highs or so this today on Tuesday. We'll pull up that chart real quick. Really, most of the progress was yesterday, 25% move in the VIX. Then we only tacked on another 5%. It did get north of 15 and a quarter earlier in the session, but we did get a bit of a fade off of it. Goes all the way back to August of 2017, since we were trading with a VIX at 14 to 15 level. So that saw a nice spike today. And we also saw, which I think is probably the most important thing, at least the most important thing to me, is a spike in the number of 52-week lows today. Now, I was looking at unconfirmed data. I haven't seen the final numbers report, because it generally happens shortly after the market closed, where those final numbers come in. But if what I was looking at is correct, it looks like we have a 1 year spike in the number of stocks hitting new 52-week lows. And that, to me, is significant if we start to see a trend like that develop. If we start to rack up a series of days where we have a surge in stocks hitting new lows, that would be meaningful. We're not there yet. I just sort of wanted to bring it to your attention of something I noticed. And actually, I was looking at that unconfirmed data, so I'll have to look at it after I record this video, or after I finish with this video. I will double check those numbers. But as it stands right now, it's something that certainly has gotten my attention. So that is sort of the development here in the short term. We have some technical damage. We are in the state of pulling back. Now, a scenario that I sort of want to bring about here. We were fortunate enough to put on some short exposure yesterday, and we did cover about 60% of that today. SPXU, a inverse levered ETF on the S&P 500. So we do currently have some short exposure still on. We still have a couple of longs on as well, so we're not just outright short, but I'm still looking at this market as something that is interesting to buy on pullbacks. I still, when we look at this landscape, and as we've talked about in the past several videos, where we have momentum that is still charging higher, we have a trend that is really, that has just started off with extreme strength to the upside. We had extreme sort of new momentum high readings across basically all time frames. Generally speaking, when we have this pullback from a scenario, that first break as we start to retrace in price after a strong trend, it is generally speaking a point at which you want to be an interested buyer. It doesn't always have to be the case, but if we do see more follow through tomorrow, selling, that is, down to this 20-period EMA, I'd very quickly start looking at stocks that are holding up to start putting on some more exposure. Again, this totally depends on your time frame and your strategy, but I'm speaking more so for me personally now from a shorter term swing trading perspective. Would be looking to pay attention to names that are holding up. And the scenario that I would generally have in my head here would be that if we say pull back to this 20-period moving average, this 279, or this even if we undercut it a little bit and came all the way down to say 276 or 277, I would be looking for, and again, nothing's this clean, I'm just drawing it with straight lines, but of course, we could have some chop in here, but it's if and when we get back up here and retest these prior highs, this is where you're going to pay attention to and pay attention to divergences. You're going to want to pay attention to breadth. You're going to want to pay attention. You can look at your RSI, your MACD. They're all likely going to be diverging because we're coming off such high levels of momentum. But if we get a pullback down to these levels and we can find some support, carve out a bounce back to the highs here, this is where the next sort of critical inflection point comes. And again, this is many steps ahead of where we are now, and this implies that more weakness is to come. Maybe tomorrow is all we get and we start with a gap lower, reverse, and we very quickly come back up here. It'll be interesting and important to watch how the market reacts back at these prior highs here. That would sort of be the next the next level of interest. But for now, as we look at this retracement, I think we can look at the levels we talked about earlier, right around 279. You could throw some fibs on here, and understandably, even if you just started from the beginning of the year to recent highs, even down around 279 or so only gets us around 38.2%. So it's still a very shallow pullback in the context of the amount of ground we've covered. 50% retracements right around 276, 277. And then that 61.8, that golden ratio, 274 would be the pullback for that size retracement. So as it stands, let's see how much sort of teeth, how much bite the sellers have right now. Can we get some more follow through? How interested are the buyers as we start to come back down here? We have plenty of earnings coming out tomorrow, big influential companies that are still yet to report, that generally carry some weight on their guidance and their outlooks. We'll see how the market responds to that. And I think that's everything. And if we look at that weekly chart, you can pay attention. The lows from last week are right around that 280 level as well. So if we start to take out the prior week's lows and we close below the prior week's lows, that would be again another sort of another little piece of data to take note of, that things are softening up here heading into February. So that's probably a lot of information. Hopefully it was structured well enough that there's some usefulness for you there based on your strategy and time frame. Let's take a look here at some other markets. IWM, you can see clearly breaking some short-term support here right around 158, 159. We chopped around there for several days. If we go to the intraday charts here, you can see looked promising briefly here as we started to kind of carve out this almost rounded bottom here as we were lifting up yesterday. Intraday close to this 160 level, but then that led to some more weakness into the close, the gap down, and now we suddenly have several days of supply sitting right above us. So that's not the ideal scenario. You can see the Russell 2000's already testing and almost closed, still held above the 20-period EMA, but is certainly testing it right now. And you can see there's again quite a bit of supply right in here. Right around 156. This is the previous kind of chop where we had this bearish engulfing day, and then we chopped around here, found support. So 156 would be important. There's lots of levels that stack in here, and then 155. So the Russell 2000, you can see, is already experiencing sort of a more sort of high stakes pullback as it stands, given there's a lot of supply in here. We are testing this trend, which extends from the really December of 2017. And this will be an important area. If it gaps down again, or if it sees more follow through, we're going to start to get more meaningful technical damage here in the Russell 2000. And for the Nasdaq 100, you can see very similar to the S&P 500. In fact, actually a little bit more bullish, the most bullish of them all, given the fact that it's still holding out right where the 24th and the 25th, right when we went sideways for these 2 days and kind of chopped around, we're still holding above there, still closed above the the 8-period EMA. So the Qs are staying a little more resilient, but keep in mind we have, again, a lot of those companies reporting over the next day or two for the Nasdaq 100. So that's the landscape overall. Let's take a look at some other major markets here. TLT is starting to lose this very significant level here, 122.70 or 123, this level that goes back over a year from buyers and sellers really kind of just battling it out right about at this level. You can see we are trading below it. That is significant. Moving averages are bearishly aligned above price, kind of pushing things down. The weekly chart looking quite vulnerable here. This is a big pattern, so if you're looking at trading big patterns, generally you may want to look at, say, a weekly close to make sure you get that confirmation. So from Looking at this week, it's only Tuesday. Right now, this would be a confirmed close if this were in fact Friday. So let's see if that happens. We're down 1.28%. If the close is here or lower than that 122.50, 122.75 by Friday, then I think we're in trouble here for TLT. The small tail here at the bottom, volume didn't pick up all that much. So let's make sure there's no fake outs there for the TLT. But certainly, if you're aggressive, you got your early entry here for more downside to come. If we go to commodities next, UNG was actually green for a lot of the day, but it did turn red here, just barely 26 basis points lower. You can see it traded all the way up to about almost 27.50, reversed, close at the lows right below yesterday's highs and closing price. So very much still a bull trend here. MACD is still hovering up near its highs. It's a lot of supply that it's working through right over here. So some resistance or reluctance to move higher isn't all that surprising. Bulls still have the benefit of the doubt here in the short term. So if you're looking to play this trend and trade in the direction of it, maybe another day of follow through lower would be, a very tactical short-term opportunity to get involved here. Nothing that interests me. Really just depends on how active you are. USO oil pulling back as well off of the highs, 1.6%, a little bit larger of a pullback. If we go to the weekly chart, you can see very much an inside candle so far. So we had a fairly large range, 4% move to the upside last week. We're trading inside of that right now. You can see this support up here right around 1265, almost where the 20 period is, and these lows from last week. This would be an important area for the past 2 weeks. Going to be an important area to watch. A little more, convincing, or a little more of an uptick in volume here for USO. So it'll be interesting to see, can we get back down here right around 1265? That might be a nice tactical spot to get involved if you are a shorter term trader there. Next, GLD. Pulling back here as well, 43 bips to the downside, bearishly engulfing yesterday's session and closing below the 8-period EMA. Weekly chart, you got an inside week forming there as well. You got rising 20-period EMA for gold still below price. You got some structure in here right around 126. So, I welcome a pullback here in GLD. I think gold and silver are both are still fairly interesting plays to start off 2018. So I'd welcome any further pullback here as an opportunity. I don't see anything just yet. I don't think I would personally be as aggressive to lift in right here. But if we do kind of methodically pull back, carve out, and then reverse off of these levels, maybe that'll give me a more interested setup. So something I'm paying attention to, but nothing I see exactly right now. Silver, funny enough, is actually a little more interesting to me now. It was always gold to start off the year, but now that we've kind of rallied up to this very key level right around the 1630 level, 1635, you can see we're dancing around it. We had this strong pullback. We had this strong breakout here on Wednesday the 24th, and we gave it right back, and we're kind of retesting and inside of this sideways kind of messy area where silver has found a lot of time trading in this area. If this starts to lift back above 1630, that would get my attention. That might get me involved in this for a long trade, something I'm paying attention to, but do not have a position in at this moment. So I think that is everything that I had to cover. So hopefully you guys are doing okay navigating some of this increased volatility. I think it'll be an exciting week given the fact we do have some catalysts on deck. We have FOMC out tomorrow, minutes that will be released out tomorrow. We get a lot of earnings coming out later this week as well. So there's plenty of headlines and catalysts to help move this market around. So it should give us some opportunities as active traders to get involved in some positions and take some tactical bets. So hopefully you guys are doing well out there. If you enjoyed the videos, do subscribe to our YouTube channel. It comes out twice a week, Tuesday and Friday on the midweek on the recap videos, and then we try and do some trade ideas in between. So thanks so much for watching, and talk to you guys again on Friday.